The iShares Core Dividend Growth ETF, DGRO, is a passively managed exchange-traded fund, ETF, that seeks to track the performance of the Morningstar U.S. Dividend Growth Index. This index includes companies that have a history of growing their dividends and have the potential to continue doing so in the future. The ETF holds a diversified portfolio of stocks across various sectors, with a focus on companies that have a strong financial position and are expected to have sustainable dividend growth. One of the main advantages of investing in DGRO is the potential for steady income growth. By investing in companies that have a history of growing their dividends, investors can potentially earn a higher return on their investment over time. This can be especially beneficial for those who are looking for a source of steady income, such as retirees. Another advantage of DGRO is its diversification. The ETF holds a wide range of stocks across various sectors, which can help to reduce the overall risk of the portfolio. This is because if one sector is performing poorly, the other sectors in the portfolio may still be performing well, helping to balance out any losses. The ETF also has a low expense ratio of 0.12%, which is lower than the average expense ratio for actively managed funds. This can help to increase the overall returns of the ETF, as more of the investment goes towards the underlying assets. DGRO also has a low turnover rate, which is the rate at which the fund's holdings are bought and sold. This can help to reduce the costs associated with buying and selling stocks, which can also increase the overall returns of the fund. One potential drawback of DGRO is that it may not perform as well during times of market volatility. Since the ETF is passively managed, it will not be able to take advantage of market opportunities or avoid potential risks as actively managed funds can. Another potential drawback is that the ETF may not perform as well as actively managed funds that are specifically focused on high dividend-paying stocks. This is because DGRO holds a diversified portfolio of stocks, some of which may not have as high of a dividend yield as other stocks. Overall, the iShares Core Dividend Growth ETF, DGRO, is a solid choice for investors looking for a source of steady income growth and diversification in their portfolio. Its low expense ratio and low turnover rate can help to increase overall returns, but it may not perform as well during times of market volatility. It is important to keep in mind that it may not be the best choice for investors who are looking for high dividend yield stocks.